You saw how we finished the day here, closing pretty much on the highs. Let's ask Joe Terranova of Virtus Investment Partners. He is a CNBC contributor as well. I want your reaction to Powell because he had another chance to take a swing at the market, and he didn't do it.
He sure had a chance to do it. April 5th of last year, I sat here on the desk. I told the viewers that we had an adversarial Federal Reserve. Scott, we have a Federal Reserve that no longer wants to be adversarial. And one could argue that they are not adversarial anymore because they've had two opportunities in the last week to be that way. They didn't do it. He also said financial conditions have tightened since the labor report.
That's kind of the thing.
Chairman Powell, what are you looking at?
I mean, he talked about conditions, right? And this was one of the issues that sent stocks surging last week on Fed decision day and the news conference, right? He had a chance there to talk about conditions softening too much, didn't do it. So this was, part two in the same old story. I thought Rich Clarida was really interesting with Sarah within the last hour. He said, quote, markets have more or less priced in a couple more hikes as the baseline, and I think that's where the Fed thinks they're going. The implication of that is the Fed and the market aren't really that offsides anymore. Peak Fed funds was at 515. Leisman was talking about that today on the halftime report. So we've solved that issue a bit, too.
Correct. I think the only way there's a dislocation is if we continue to get very strong labor reports. And Chairman Powell answered at the end of his remarks what the response would be to that. You'd obviously see more rate hikes. But listen, Scott, I'm a triple-digit golf player. And last year, once, I shot in the low 90s. So we had a great labor report in January. That does not make a trend. I think that would be the only thing that would motivate the Federal Reserve to extend the rate hiking cycle beyond what the market is pricing in right now.
Forget about, more hikes. I mean, right, a couple more hikes, okay. I thought, and Sarah, she nailed this on when she was talking to Clarida, if inflation data continues to improve, I think towards the end of the year, they could be open to considering a cut. That's the former Fed vice chair. Saying the quiet part out loud, right?
Well, I'm not necessarily sure. First of all, I don't think...
he's been in the room, and he has a great view of sort of how policy is set. I mean, the idea of a cut, the market had been looking for a cut later in the year. It was deemed to be no way. Fed's not going to do it. He said, all right.
All right. Well,
if inflation goes down a lot, they might.
Well, you would have to see beyond inflation going down. I think you'd have to see some tremors in the labor market itself. Without question, we've got a peak commodity story that's playing out. You look at the price of lumber year on year, it's down 68%. If you look at the price of crude oil year on year, it's down 40%. If you look at the price of wheat year on year, it's down 40%. Used vehicles are down. There are other areas. The one area of the market
services,
that we need to see,
services hasn't cracked.
But it's housing too. It's really housing, and that's such a significant contributor to the inflation reading. We'll find out next Tuesday,
Maybe
Valentine's Day.
Maybe it doesn't. I mean, you get CPI, right? Valentine's
CPI,
Day?
8:30 a.m. next Tuesday. We'll get that.
Okay.
If housing begins to contract significantly, that disinflation story is only going to gather momentum.
So did the Fed chair today, in essence, give the rally, the market, a chance to get really up to cruising altitude at this point, at least until the next meeting?
See, the way that I would answer that is, I don't view the Federal Reserve right now as the adversary of the market. I think the adversary of the market right now is the lag effect of the rate hikes and what does that do to earnings. So I look at the market right now. I do think there's upside potential for sure in the market. How do you strategically want to be allocated? We'll talk about that in a little bit. But I think the market has a runway now leading into the next earnings report. I don't think you have the all clear, though.
Earnings report, that's, a lot longer than I was thinking.
No, I think for this quarter you're going to be okay. And I think that builds upon the thesis that the first half of the year is going to be better than the second half of the year.
I'll tell you what Lori Calvasina just said at the end of closing bell, too. Quote, in general, the Bears have overstayed their welcome. Is that what's happened?
I don't see how you go back to the October lows. I can't see how we make a return. back to 34.91, which is where the S&P was in the middle of October without a significant exogenous event. Does that mean that we are going to immediately trade up to the highs from last January at 4,800? I don't think so. It doesn't appear to be. That's not how I'm allocated right now, but I think the low is in place from October.